Hello, my name is Nicole Elliott and I'm a technical analyst and private investor. And what I was going to discuss today is the performance, the relative performance of different financial instruments in the first quarter of this year. And I'm sure you've seen loads of this sort of rah, 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 isn't it all brilliant type of comment. I saw one analyst saying this is one of the most memorable quarters in history. Well, yes and no. Yes, the Dow Jones Industrial Average is up 18%, recovering from the catastrophic losses in the fourth quarter of 2018, may I add, and you're still not back up to where you were 6 months ago. So, right, yes, it's rallied, but in fact, of the indices, the best performer so far this year, and up a whopping 41%, is the Shenzhen A-Shares Index. Now, almost none of them are at new record highs except this first chart that I brought to you, and this is Brazil's Bovespa Index. Remember, they elected a new, rather controversial president, Jair Bolsonaro, and he took office on the 1st of January. Brazil is very much in holiday mode, January/February until after Carnival, and that's when the index hit a new record high. It subsequently dropped sharply, as you can see on that weekly chart, for all sorts of reasons, not less the likelihood of the president getting his way with the pension reform in Parliament. But, last week it did bounce from the 26-week moving average. The moving averages have been bullish since October last year, and you can see this has put on a really good performance since October. It's solid. It's one of the best all-rounders over the last 6 months, certainly. I'd suggest that because the clouds are moving higher, it's well above the trend line, it's just a small blip, but that bearish engulfing red candle that we saw at the end of March middle of March, is flashing you a small warning saying, like the other indices, do be careful. Don't get carried away. What then happened in March was a serious backpedaling by the Federal Reserve and the European Central Bank, now followed too by India today, which has cut its key interest rate by 25 basis points, as they realised that the economy isn't as rosy, despite what they've been telling us. And really amazingly, one of the best performing markets in March was the gilt market. I mean, despite all this Brexit business that's endless and grim, investors are piling into UK gilts. And my example is the long-dated, the 30-year index linked, which is by far the best performer. And you can see how the yield on this one has absolutely collapsed this year from minus 1.45% to minus 2%. So you're really paying a lot for this one. So, for example, the long-dated 0.5% of 2050, in January it was priced at £175. It hit £207 at the end of March. So you really are making money, and please don't blame it on Brexit. And my final chart is the Kingdom of Sweden, a 10-year generic yield, benchmark yield. And you can see that since January last year, when yields were about 1%, they've now dropped to 0.1%, and they're within a whisker of the record low. And this is despite a central bank that perpetually is tinkering with its interest rates. It really is depressing. Now you've got a big scandal in terms of money laundering and whatnot, and other shenanigans in Scandinavia. So I can understand why people would be happier with a government bond.